Hello, everyone, and welcome to our program titled All Things Energy for NFFS Members. My name is Carrie Shepard, Marketing Analytics Manager for APPI Energy, and I'll be your moderator for today's webinar. Please note that all participant lines are muted. You may submit questions anytime during the session by using the Q&A box on the bottom of your screen. Our presenter today is Jane Seagrave-Sidebottom, Vice President, Business and Marketing Development with APPI Energy. Joining us as well today is Jared Weaver with NFFS. Welcome, Jared. Let's get started.
Thank you very much, and good morning. I just wanted to take a few minutes to introduce our presenter today, Jane Seagrave-Sidebottom. As you know, APPI has been our endorsed energy consultant since 2002 to help our members, like you, save money and create budget certainty for their businesses. While they provide electricity and natural gas procurement, last year they began rolling out the Energy Solutions Division for efficiency projects and improved sustainability. I hope you all enjoy the program, and I look forward to any of your feedback. Jane?
Great, thank you, Jared. And yes, we certainly appreciate the relationship that we have with you, Jared, and so many of your members that we're able to help through this program, and look forward to being able to help many more to come. So with that, let's go ahead and get started. Okay, so I just wanted to review the agenda today. We're going to be talking about the Energy Solutions Division that Jared just mentioned. And then we're going to go into the industry and what is going on today in the electricity and natural gas markets. And then we'll talk a bit about the procurement process and how our process is unique and can really help members reduce their energy spend and create budget certainty. So first of all, talking about the different products and technologies that we can help the members employ for their facilities. It really runs the gamut from everything from LED lighting and energy conservation measures, renewables and solar and battery storage combined together, and how that can really help with sustainability and resiliency, quite frankly. Combined heat and power, and that's been around for many, many years, and it's a great way to increase your sustainability, and you're going to be using less power. It's much more efficient for the members as well by capturing that steam. And talk about demand response. The demand response programs can be rather robust, especially for a NFFS member, if they're able to enroll in these programs and really take advantage. When we know that there's going to be an event that's called, they would have to curtail their usage. And by doing so, they're paid handsomely from the grid system operators. Last week was a really hot week. We anticipate this week to be a hot week as well. So we may be seeing some peak demand days. And what that means is every year, there are 5 peak demand days each year. So it's when we're using the most electricity, and that's when your cap tags are set for the next year. So if during those peak demand days, you can reduce your consumption, the charges that you're going to get next year on your capacity tags will be lowered. So that's a great way to, in fact, lower your cost going forward. The problem with that is that we don't know exactly when the hottest days are going to be, because although last week was very hot, we still have August to get through. So we'll see hot days there too. So a little bit about the LED lighting program. Our process is very efficient. Oftentimes it begins with a phone call. And what really helps us know if your member are good candidates is to really talk about the burn time and how long do they have their lights on. Are they running 3 shifts? Are they only running 2 shifts? Is it that they have lights on 24/7? So we often find that manufacturers are great candidates for LED programs and can really see a great ROI when we implement the solution. And then we'll come out and do an on facility assessment to really see where we need to have the lights replaced. Oftentimes with LED, we don't use as many lights in a facility because the lighting is just so much better. And then we'll talk, of course, about rebates and what opportunities there are, and make sure that you're getting rebates not only from your local level, but maybe there's some state incentives or even some national incentives. And we'll make sure that we capture all of that for you. And then we'll recycle properly the old equipment and the old lights. And we'll do all of that and track it to make sure that what we anticipated your expense to be would be. And then the other thing that we oftentimes find is that with LED lighting, this can be on bill funded. So for instance, you will not have to outlay any capital expenditure. So we can negotiate a new contract for you that would include lighting. So say, for instance, we negotiate a new contract with a supplier, and the pure kWh price, say, would be 5 cents a kilowatt. We can then get the cost of the project and overlay that in, and then the cost per kWh may go up to 6 cents or 7 cents. And you're just paying that additional couple of pennies throughout the life of the contract. And therefore there's no CapEx, which is a great alternative for many. And then, as I mentioned, with demand response programs, we can really implement a plan that's going to be beneficial to you, the member. You may have alternative generation at your facility, whereby you'd be able to come off the grid for a specified period of time. It's usually late afternoon that these events are called. And when you do that, you are, again, incented financially to take advantage of that. And then the solar PV, of course, with solar, this can be a ground mount system. It can be a system on your roof. It could be parking canopies. So there's different arrays that you can have installed. And oftentimes we couple that with battery storage. So with the battery artificial intelligence, it knows when your peak is for your facility, and it will automatically generate, use the battery, the storage that's in the battery from the solar, so that you're not using from the grid during those peak demand times. Again, really giving you a lot of reduction in your cost and oftentimes great ROIs. And we have a lot of information about solar and battery AI, and we certainly welcome the opportunity to talk to members about that as well. And this is what I'm talking about with regard to the battery AI combined with the solar. It knows where your peaks are in your facility, when that's going to happen, and then automatically, without you don't have to make any changes or switch anything. It automatically kicks in for you during those peak times. Again, keeping your cost lower than they would be if you were being charged those peak prices, because they're much higher. And then combined heat and power. This is just a little example of what happens here, and recovering the steam and the hot water and using it elsewhere in your facility. So again, this has been going on for years. There was a train station actually in New York back in the 1800s that was using this type of combined heat and power. I don't know that they called it that back then, but it's been around for a long time. And because of the advancements that we've made in this, it's really enabled folks that don't have as big of a facility. We're able to make smaller units now as well. And then another area that really helps manufacturers with their tracking is really web-based utility bill management. So this is a system whereby it's a portal, it's an online, right now, you can take a look at what's going on in your facilities, not only for electricity or natural gas, but also your recycling, your water, your wastewater, other utilities that may be important for your members to really track those dollars and what's happening with them. And it's real time. It's not, you don't have to wait for accounts payable to pay bills and then finally get the receipts back to see what you've been doing with your usage. So it's a great way to really track. And also, if you have made improvements to your facilities, to make sure that you're seeing the fruits of those and that you're seeing your electricity or wastewater or whatever it is that you're keeping a finger on that's, you know, reducing that. And then the next area that I really wanted to talk about today is the industry and what's going on in the industry. And with that, we will take a look at the natural gas market, which is down at the bottom left, and the electricity markets, which is down at the upper right. So you can see a couple of things to note here are really the volatility in the market. Natural gas and electricity are very volatile markets. Back in 2004, you may recall the polar vortex, and you can see the spike that created in the electricity market. And with that, if manufacturers were not in fixed price contracts, we saw that they blew their entire budget for electricity in 2 months. And the prices were just staggering. It was the highest ever recorded price of electricity. So, and one thing to note is the electricity market really does follow the natural gas market. And you can see the natural gas market is almost at an all-time low. And this, of course, COVID has a lot to do with that right now and what's going on. Also, the liquid LNG market, the liquefied natural gas market, really has dried up. Our exports have gone, they've been curtailed at least by 75%. So we're not exporting as much natural gas. So therefore, the supply that we have is rather large. However, we don't anticipate that to stay for long because one factor is the crude wells are drying up and they're not drilling for crude because it's not at all economical. They're not even at break-even numbers right now. And natural gas is a derivative of the crude. So we anticipate the supply of natural gas to come down a bit, especially now as we're getting into the warmer days of summer and more natural gas is being used to generate electricity. And to talk a little bit about our sister company, which is the Energy Research Council. They are a company that really works with a lot of suppliers nationally to get in pricing so that we can determine really when is a good time to buy electricity and really for what contract length is going to be best for your members. Because with these data sets that we have and these data points that we have, we can really help to pinpoint that and start going out in the market and really negotiating on your members' behalf. So the top chart shows you trends of what's going on. I just chose PICO, which is the service territory around the Philadelphia market. And we're looking at 12, 24, and 36-month pricing and what's going on there and the fact that they're coming down quite a bit. And then we Also then we'll couple that with the price to compare chart, which is the bottom graph that we see here. The bar charts show you what the utility price to compare is, so that you can see exactly what's going on with the utility. And keep in mind the utility price to compare in PICO changes quarterly. So if you're on the utility service rate, your rate that you're going to be charged will change every quarter. And then we overlaid the prices that we're getting in from the suppliers every day into this particular market. So this is not a national average or a state average. This is specifically for PICO. And keep in mind, if you have facilities in 5 different states or 5 different service territories, we can drill down for each one of your facilities to look at that particular utility. So of course you can see here that the PICO price to compare is typically much higher than the prices that we're getting in the competitive market. There are times that we see that the prices down here, for instance, the prices are a little bit higher than they were in the at PICO at that time. So the conversation is a little like this. It's that, why don't you hold and stay with the utility for now? Let us continue to monitor the market and see what happens. So as we can see, the PICO prices started going back up and the supplier prices were coming back down. So it would be at that point that we would most likely get the member into a competitive contract. And we do know, for instance, that PICO prices in September are going to be going back up. So that's just something to keep in mind as well. And then I wanted to finally come over and talk a little bit about the procurement process and what we do specifically to help with your members. So first of all, I'd like to point out the map and what that means to us and to your members. In the green states, those states are deregulated. Colorado is not, I just saw that. Colorado is only deregulated for natural gas. So I apologize for that on this graph. So we'll make that correction. But the green states, excluding Colorado, are both are deregulated for both electricity and natural gas. And the blue states are deregulated for natural gas. And the gray states are partially deregulated for electricity and then also deregulated for natural gas. So those members in those particular states, we would just need to have a conversation to see, in fact, if they would qualify. But the green states are really the ones that we work with most of your members in. Again, excluding Colorado. I had not seen that before. So what we'll do with the procurement process, we'll analyze your usage and really take a look at that. To get started and having us help you, there's only 2 things that we need from the member. We need a copy of their most recent bills or bill, and they sign what's called a utility usage request form. And that's not a legally binding document. That just enables us to go to the utility and get their usage for a year. And then we will then structure the RFP and submit that out to the vetted suppliers that we know, like, and trust. We only have really approved about 25% of all the suppliers that we've looked at. And we've looked at well over 150 suppliers across the United States, and we only work with about 35 of them. So again, our standards are very strict, and that in and of itself is a huge benefit to the member, because who has time to read 10 different electricity contracts and understand all the ins and outs of them and what they really mean. And at APPI, we do have corporate counsel and our vice president of operations that do just that. So then we will then go out again, submit the RFP out and negotiate the price and terms of the contract. Oftentimes price is a driving factor, no doubt, but it's also the terms of the contract and are there bandwidth provisions that perhaps we can negotiate out for the member's behalf. There are different terms in the contract that we can really help you understand and help you understand whether or not you agree with them or not. And then we're going to monitor the market and really look for renewal opportunities. And oftentimes with NFFS members specifically, we are looking at renewal opportunities 18 months to 2 years before their current contract expires, because I showed you the markets and what's going on right now. So it's very favorable for your member, even if they have a contract that doesn't expire until 2022, to be looking at the market right now. We can layer in another contract that begins in 2022, oftentimes at a lower price than what they're paying today. And we do all of this for the members at no upfront cost or obligation. So we can get all the way to this, which is where we would present pricing to your members. And they may say, you know, we don't want to do it right now. And that's fine. But at least they have been through the process. They are much more educated. And when the time is right for them, you know, hopefully they'll come back and give us a call and see if we can help. Or it may be that my president is on vacation for 2 weeks. Can we look at this in a couple of weeks? By all means, we'll do that. So keep in mind, there's no upfront cost to the member. So this is what we present to the members. And this is what we call our pricing discovery. We've gone out, we've structured the RFP, we've submitted that out to the suppliers. We tell them we want pricing back on May 12th at 10 a.m. and whoever comes to the dance is what we present to the members. So there could have been another 10 suppliers that came back with this particular customer, but maybe they were just out of the ballpark and we just didn't even include it here. So what you can see here rather drastically is the price spread from Hudson Energy at a 36-month contract to Constellation at 10 cents, almost 10.3. So quite a spread. I have to tell you, I'm not used to seeing that big of a spread. Typically we'll see anywhere from a penny to 2 pennies is a pretty typical price spread that we see, but this is huge. And it could be that Hudson was long on energy and just needed to dump it. So again, having us go out to the market for you is invaluable because this is the type of information that we can come back with. And it's, you know, huge. So I just wanted to kind of recap what our program is. Again, we're going to analyze your usage, do the energy assessments to see how we can help on the solution side. We're going to negotiate contracts for you and implement the customized solutions. And that may mean just procurement, or it may mean a holistic energy strategy for the members. It's going to include both procurement and supply side solutions as well. And then, of course, our customer service team is there for you for after the sale. You know, oftentimes we find that maybe there was a meter that wasn't picked up, and we can make sure that that's added onto the contract. Or there could be billing issues that you're having with the new supplier, and we'll take care of that for you. I like to say that we have a bat phone to the suppliers, and Tracy and her team really do an incredible job of helping with any customer service issues that do arise. And then a little bit about APPI Energy. We have been in business since 1996. I like to say that we're an old company in a young industry. We have, along with NFFS, 160 other national and state trade associations that endorse our program. I would say about 43%-ish or so of our clients that we have are manufacturing. So we are well versed in the manufacturing world and have enjoyed very long standing relationships with many manufacturers across the United States. And we manage about 10.1 billion kWh and 20 million decatherm, all of that with about 34,400 accounts. And that's what I had to share with you today.
Thank you, Jane and Jared. At this point, we do invite participants to ask questions through our webcast system. If you have difficulty sending your question, please email them to jseagraves@apppienergy.com, as you see there on your screen.
Jane, I have a question for you.
Yes.
You had mentioned about quoting out and helping our members who might already have an existing contract. Maybe it expires out 12 or 18 months from now. Is this still a program they should be looking at now, and why?
Yes, definitely. First of all, you don't want to get your back up against the wall when you're thinking about renewing a contract, because at that point your options are much more limited. And the closer in you get, the more volatile the market becomes for you, because it just is more volatile as you're getting so much closer in. And what we can do is begin the negotiation process today. That will begin when your next contract expires. So if it is 12 or 18 months, really let's start looking at that, and we can layer that in, and we can come up with a strike price that you find that you're really seeking, and we can, it may take us a while to be able to come up with that strike price. So again, give us the time to work on your behalf. So
Jane, just a follow-up question to that. As your graphs showed earlier, both electricity and natural gas pricing seem like they're nearing historical lows. Would you be able to lock in those prices now for a contract that becomes effective out multiple months into the future?
Yes, absolutely. So it's a great opportunity. And we're seeing, I would say our typical contract length is about 36 months. But today in some markets, we're seeing them go out even as far as 72 months. So it's a great opportunity to really lock it in.
That sounds great.
Yeah.
Thank you, Jane. We do have one more question for you. Could you explain again one more time or quickly review what an optimal lighting retrofit client would look like?
Right. So again, the biggest thing about LED and a lighting retrofit is all about the burn time. So if your operations are up 24/7, or maybe not even 20, maybe it's 24/5, or maybe it's 25, you know, we are here to help look at that for you. And the assessments are free, and it's amazing at the difference an LED retrofit does for a facility. I mean, the increased security that you get in your parking lots, to just what you can see on the shop floor is amazing. So again, it's so worth it. We just did one actually most recently. It was actually a candy manufacturer. So who doesn't love that to begin with? But they noticed the morale of the employees, and it was really amazing at how much better, safer, happier they were to come to work in that facility. So again, it's a great opportunity. And then with the on-bill financing that we can help with, there's no capital expenditure. It's really a no-brainer.
Thank you. At this time, it looks like we have no further questions. Thank you to everyone for participating today. A special thank you to Jared Weaver for joining us, as well as our presenter, Jane Seagrave Sidebottom. Today's program is copyright 2020 APPI Energy with all rights reserved. This concludes today's program. You may now disconnect. Thank you.
Bye-bye.
Thank you. Bye.